Hello, everyone.
Hi, Konstantin. How are you?
Yeah, I'm fine, totally. Welcome to the Twitter space hosted by Fringe Finance. My name is Konstantin Shirokov, and I'm the marketing director of Fringe. I will briefly describe what Fringe Finance is doing for our listeners outside of the Fringe community. So, Fringe Finance is a lending and borrowing protocol currently available on Ethereum network and launched in June of this year. The main goal of Fringe is to provide lending markets utility for as many assets as possible, including the assets that currently lack that opportunity in the market, naming long-tail assets, liquidity pool tokens, and a variety of other assets on Ethereum and across the plethora of other available chains after the implementation of the multi-chain and cross-chain solution. At the moment, Fringe has 26 lending markets with a combined debt limit of more than 135 million US dollars. I'm excited to tell you that I will be joined today for a conversation with a great guest, Imran Mohamad, who is the head of marketing of the KyberSwap and Web2 normie turned DeFi dad. How are you today, Imran?
Thanks for welcoming me, Konstantin. Hi, everyone. I'm great today. I'm looking forward to our chat.
Awesome. A quick reminder to everyone that we have a giveaway of $50 worth of Fringe token and 200 KNC tokens worth approximately 190 for the best questions. That reward goes to the authors or maybe a single author or the best questions of our discussion. Remember that to participate, you have to follow Fringe Finance and KyberSwap accounts, as well as to retweet the post or the announcement. If you would like to ask any question, please feel free to raise a hand here. And at the end of our conversation, I will invite you to become a speaker and to ask that. And in case if you don't like to speak by voice, you can drop the question in the written form. Imran, for who's unfamiliar, can you please introduce the overall concept of the KyberSwap and the difference between KyberSwap and Kyber Network?
Sure, Konstantin. Thank you. So, KyberSwap is the best place to swap and earn in DeFi. We are a decentralized exchange and an aggregator on 13 chains. So, all your major Ethereum, EVM chains, Polygon, Arbitrum, BNB, Optimism, so on and so forth. We also are able to enable you to have not just the best swap rates on the 13 chains, but you can also bridge between chains now. We have our own liquidity protocols, and this provides liquidity providers the best earn rewards with organic trading fees coming in to provide rewards to liquidity providers as well as liquidity mining rewards. So Kyber Network is the company behind KyberSwap. We ICO'd in 2017, so 5 years ago before DeFi was called DeFi. Our claim to fame was that we launched with the backing, the advisory of Vitalik Buterin, the founder of Ethereum. We did a famously 52 million ICO back then. And since then, as mentioned, we work with all the major foundations. We work with more than 100 integrations across our ecosystem. We're very happy to talk about the partnership with Fringe Finance today. For us, we are very clear that our long-term goal is to enable DeFi and make it easy, safe, rewarding for all, and to make KyberSwap the most used decentralized exchange and aggregator, the only one you ever need whenever you use DeFi. I hope that helps.
Yeah, that helps a lot. So you're quite a longer lever in the world of crypto. I love that phrase when DeFi was not called DeFi.
Yes, we've been around a few bear markets now.
Yeah. You have mentioned KyberSwap Elastic. What features set KyberSwap Elastic apart from other protocols and other solutions?
So thanks for asking. So KyberSwap Elastic is basically a revolutionary liquidity protocol with concentrated liquidity, tick-based. Some people may compare it to, for example, Uniswap version 3. However, it's not trademark, right? So for us, we are decentralized maxis, and we make it as decentralized, as open as possible, looking at integrations, looking at building on top of it. Today, if you look at the KyberSwap Elastic and KyberSwap overall, right now we are consistently in the top 10 protocols in terms of daily revenue by DEXs. We are consistently top 10 DEX in terms of trading volume as well as TVL. So I think if you look at the results of Elastic, we don't need to talk about the features. Ever since we launched it just about under half a year ago, we've been basically advancing in terms of our TVL and volume in big strides. And our real goal is to make it top three. If I were to look at what we're trying to enable, KyberSwap Elastic, besides being tick-based, besides enabling concentrated liquidity, we actually have a very interesting NFT-based liquidity mining mechanism that allows auto reinvestment curves, makes it easier to compound your rewards, and certain protection to minimize impermanent loss, to prevent just-in-time attacks, which, for example, on the Uniswap protocol, just-in-time attacks are rising in terms of how effective they are and how much money they have made, the exploiters. So the whole goal is to preserve capital and to maximize returns for liquidity providers. So I think that's just a quick snapshot of Elastic, and would love to take more questions after.
Yeah, I was wondering what is the tech side, but you have mentioned already some parts of the difference between UniV3 mechanism and KyberSwap Elastic.
Yeah, so we have some technical blogs up. So, for example, this is quite a frequently asked question. If you guys head over to KyberSwap, you go look at our blog. We do have certain differences. At the end of the day, we have same objectives, right? So we want to concentrate liquidity. We want to preserve capital. We want to maximize returns. I would say that the objectives of the concentrated liquidity of Elastic versus, let's say, UniV3 and actually all AMMs, it's to do that. But there are definitely some material differences, and obviously because V3 of Uniswap is trademark, it's completely different code, right? So KyberSwap built it up from zero.
Nice. And attracting liquidity is quite a highly competitive task in the current. What are the initiatives that make KyberSwap liquidity mining more attractive?
I think if you look at how do we make liquidity mining and liquidity provision more attractive, I think there are many ways to look at it, right? One is how much TVL can you seed? So obviously we have our own pools that we seed. We look at really figuring out, we have essentially mad scientists that are looking at all the different possible pools, all the different possible trade routes, and looking at what pools can provide great volume, right? So some of our pools, for example, just today, the pool on our Optimism chain, USDC, at about 133,000 TVL is doing almost 9x volume at about 1.1 million daily 24-hour volume. So it's highly capital efficient, and so I think part of it is looking at the infrastructure itself, the liquidity protocol itself being capital efficient, well built, gas efficient smart contracts, and then looking at how do we optimize the deployment of the capital across the protocol. So which are the pools that we seed, which are the pools that we bring attention to, which are the pools that if we provide rewards can kickstart a nice virtuous cycle. It does help, obviously, that we work with the best in the business, right? So we work with people like Fringe Finance as well, but we also work with the foundations themselves. So we actually run liquidity mining campaigns, for example, with Avalanche Foundation themselves. We're in touch with all the major foundations, including Polygon, Ethereum. We also did a mining campaign with BitTorrent chain earlier. Right now, we are with the liquidity, or rather liquid staking platform called Lido Finance. So people can use their stake Matic or their stake ETH on the various chains, including Polygon, Arbitrum, Optimism, and soon Ethereum, in order to provide liquidity, earn LP fees, as well as earn mining rewards. I think one of the keys here that we see is that DeFi users are always interested to see what new initiatives, how can we earn in a new way in DeFi. So I think one of these things that we are looking at with regards to liquid staking assets and then using it for LP and farming is definitely one thing. I think the other thing that we're doing right now with you guys with Fringe Finance, where you're able to use, for example, collateral like KNC, get things like USDC, and then farm it back into our pools, providing very interesting ways and what we call degen yield loops to help people really experiment and figure out all sorts of ways to earn a return on the capital. I think those are very interesting ways that so far I think the past few months have shown quite a bit of interest from the market.
Yeah, that's something that you provide, the capital efficiency for the holders of assets. You have mentioned the protocol is operating across the chains. What currently are the chains that you are operating on, and what are the plans regarding to that?
So if you look at KyberSwap today, for those who have not gone to KyberSwap before, it's kyberswap.com. You will be able to see that we have 13 chains right now. The chains will include Ethereum, BNB, Polygon, Avalanche, Phantom, Chronos, Arbitrum, BitTorrent Chain, Velas, Aurora, Oasis, Optimism, and quite interestingly, Ethereum Proof of Work. So I think that's something that we did about, like right when Ethereum merge happened, there was a lot of users trying to figure out, I got airdrop tokens on Ethereum chain. Where can I access them? I can't access them on like 1inch or Uniswap. We make the decision for autonomy, right? So like if these are your tokens that you got airdrop, you should have access to them. And we provided that. We got quite a bit of positive feedback and coverage from the market. So those are the 13 chains that we have now. If you check out the chains that we have listed, you will also see that Solana is coming soon.
And what is your personal take on the Ethereum merge and the future of Ethereum proof of work?
I think the Ethereum merge for Ethereum and EVM is a great thing because we were talking about really looking at how do we upgrade the whole network, how do we go towards solving the trilemma and really scaling up. And I think the merge is definitely a necessary thing for upgrade. I think also famously it reduced the whole world's energy usage by 0.2%. So I think those are like great strides. If you look at Ethereum proof of work, the reason why they broke off is because there's a whole bunch of people that say, hey, we want to continue mining Ethereum, and that's the way we want to go. And I think it's very early to say, we are in touch with the team over there at ETHW, and I think it's still very early to say whether they have a strong longevity, whether traction will take off, whether projects will build. I think a lot of it will really come down to whether there's enough of an ecosystem and builders that take it on. So it's very much, I think, still in existential point, and nowhere near unseating Ethereum as the key chain for sure.
Thanks for such a detailed answer. And how do you view the future of the market in general? And what will be the role of KyberSwap and Kyber networks as a whole in it?
That's a big question.
Yeah, right.
Let's talk about what's happening now, right? So I think most people coming in are going, okay, how do I navigate the market now? Is the bear market going to last a long time? What do I do with my assets? Do I hold? Do I stake? Do I farm? I think most people many retail users are at a loss. I think our key focus for KyberSwap now, like short term, is to ensure that we provide as much utility, as much security, as much safety, as much efficiency to our users. If you look at what we're trying to do with our aggregation, we route through and we provide the pure best rate for all users. So the whole point here is when you swap, you save the most money, you get the most return. So that's one. Two, when we're looking at what can we do with our liquidity protocol? What can we do with our partners? What can we do with our capital? What should we do with our user base? I think the bear market might last, I don't know, 6 months, 12 months, 18 months. Some people might say it's even longer. The goal here is to ensure that we can help users preserve the capital and even earn through the bear. And find utility with KNC, find utility with KyberSwap. And I think that's what we're trying to do with all the various partnerships, Fringe Finance included. I think if you look at the long term for sure, right? DeFi is just right now, if you compare DeFi to TradeFi, we are at 1 to 150. The size of DeFi is 1 compared to 150 times the size of DeFi is TradeFi right now. And in the next 5 years, it's gonna exponentially grow, right? So if you look at what just happened with announcements like the institutions taking part, major Web3 coming in with major brands, things like Reddit and Instagram coming in with NFTs. I think the merge of all of this will drive an exponential number of users in the next 10 years. We actually released a statement that we believe DeFi can even overtake TradeFi in 10 years. It's one of the reasons is because institutions are coming in, and a chunk of institution money is all going to go into DeFi in the future as well. So, and in some form, in 10 years, it's not going to look exactly what it looks like today. But in our opinion, it will really, grow very, very fast. So I think that's one. The next thing is I think increasingly with what's happening with the market, with the meltdowns, with distrust of centralized institutions, I think users will continue to increasingly value privacy and control. Where that goes, I'm not so sure, but I think there's a lot of talk around, for example, ZK proofs, credentials, and KYC in order to use DeFi. I think at some point it might hit towards that. But I think the market is so fluid that we don't really know whether such a thing will ever happen or will happen 1 year from now or will happen 5 years from now. But if you look at the actions from the SEC and the various governments around the world, I think people in DeFi can probably tell or predict that something along those lines are going to happen, especially in the major markets. So I think if you look at what KyberSwap is trying to do, it's always really focusing on making sure that we have a top tier product that's built from scratch, that is audited. We are looking at ways to ensure that our holdings are always covered, our users are always protected. And in the future, if we need to go down things like compliance or regulation, our approach will always be decentralized because we are decentralized maxis. But I think it will be a future where DeFi and TradeFi coexist, and DeFi will be pretty much just as big as TradeFi. But right now, it's so early in the game. The focus is to survive and earn through the bear.
Wow, thanks for that. So we can say that our listeners are blessed, and we'll take the best seats in that DeFi train, right, in the nearest future.
I hope so.
Yeah.
I hope so. I hope we all build together. Yes.
You have mentioned that you are decentralized maxis. Can you name what are the steps that you undergo to become more decentralized?
We are one of the first guys to operate our governance with a DAO. So we have our Kyber DAO that operates the issuance of our KNC token. So the KNC token is obviously the main topic of discussion right now with regards to the partnership between Kyber Network or KyberSwap with Fringe Finance as well. That's also where our treasury is kept with regards to the DAO. That's where we get our source to deploy a lot of liquidity and capital. That's where a lot of our users actually come in and also provide ideas, feedback, governance. Where do we deploy our treasury? Do we mint more or do we not mint more? We are not an auto emissions protocol. We have fixed supply, but sometimes for strategic reasons to grow the ecosystem, we may mint more. And then how to allocate it and which even sometimes which features or which partners to go towards. So I think for us, we are really community based that way. So I think the decentralization from the aspect is very important. If you look at our whole product is built to make sure that it's permissionless, private, self-custodial. or at least non-custodial. So I think that's where we're starting off. Again, when we talk about things like in the future with regards to what happens with, like people were talking about, hey, do we need to have decentralized GitHubs? Do we need to have decentralized hosting? I think those are things that have been discussed. For now, we still have quite a bit of that in some centralized places. But as with every other solution, platform, and protocol, I think these are different levels of decentralization we're looking at. And then lastly, the area of regulation. For now, we are completely permissionless. And if we do want to look at it, we want to look at how can we operate in the future if ever there needs to necessitate such a step. Can we do that where we can comply, where we want to operate while preserving a user's privacy and not keeping any of your personal data? So right now, we still don't keep any of the personal data.
Wow, that's a huge steps. I think you should be an example for other protocols in that steps that you go to become really decentralized. Can you share some recent noteworthy updates from KyberSwap in your development process?
Cool. Yeah, most happy to. So if you look at some of our recent announcements, besides the Fringe Finance one, most recently we actually integrated multi-chain to bring seamless cross-bridging. So what this means is across all 13 chains right now, you can actually bridge across all chains. You can swap the list of tokens that multi-chain supports right now across the chain, and you don't have to do it on multi-chain or any other external bridge. So I think that's really one step closer to completely seamless and safe cross-swapping or cross-chain swapping. So I think that's one. The second one is probably all the new liquidity mining campaigns that we have launched. So I think the major ones I could share would be around Lido Finance. So those are on Polygon chain, those are on Arbitrum chain, those are on Optimism chain, and also upcoming Ethereum. We also have besides that, done liquidity mining with Avalanche Foundation themselves under the Avalanche Rush program, with mining rewards, as well as with Banky Finance and Yeti Finance for liquidity mining. So besides supporting KNC as collateral on Fringe Finance, we also recently did that with QiDao as well. So I think those are some noteworthy updates. And like all these just happened in the last maybe month or month and a half. And yeah, we're constantly shipping.
What is your best advice how to find the balance between liquidity incentivization and rewards as a whole and inflation of the token?
I think that's a great question. I am not a liquidity strategist nor a tokenomics expert. But on our side, what we're looking at is how can we, number one, seed with the optimal amount? How can we reward with the optimal amount? Actually, with regards to rewards, we are quite conservative in terms of the rewards that we put out. And what we're really looking out for is can we seed enough volume that facilitates a good a percentage or a good multiple of trading volume. So TVL compared to trading volume, which is essentially the capital efficiency here. Because once it goes to that, we can see some of our pools organically, even like a stable coin pool like the USDT, USDC, getting APRs of like 26%. And this is organic yield. So this is what they call hashtag real yield, right? So I think a lot of it is really trying to experiment. We're doing our best to experiment and to plan and to kind of look at the projections to have pools that over time become organically yielding good rewards, while at the same time providing a good volume of trades, yet giving users the best rates. So I think it's quite an interesting set of constraints that we're trying to mix and match. But some of these early experiments that we've done in the past 3 months are showing some really good promise.
Yeah, real yield process is definitely the current stage and in the future where DeFi is heading, because just crazy crazy giveaways and Ponzi schemes will not work in the bear market, first of all, and will not work in the long term.
Yeah.
Can you share what are the current priorities of KyberSwap and what are you aiming long term?
So if you look at it, really our goal is to help users trade smart. We have a tagline that we just came up with called Trading Smart, which is, it's a difficult market. We want to help users make the best decisions, make the most out of their money in the safest possible way with the least amount of work. So one is making sure that we give enough opportunities and programs to earn through the bag with the liquidity pools and liquidity mining campaigns. So that's one. Two is to make sure that no matter what you're doing with your money, whether you're swapping, hodling, farming, or a combination of any, you save money with the best rates using KyberSwap. Third is to save time and effort, providing as many chain integrations, as many project integrations, as much liquidity pools, and as much and now cross chain bridging, so that users don't have to use like one DEX on Solana versus one aggregator on Polygon versus another on Chronos or Phantom or Villas or Aurora. So the whole goal is to be a convenient one-stop shop for our clients. And I think the last one is what we call making better decisions, right? So if you want to be smart in crypto, there needs to be better decisions. So looking at the analytics that we provide, the trading tools that we provide, we have one interesting tool I like to share. It's called the Discover tab. So on kyberswap.com/discover, what we notice is that, we go through a lot of trading volume, and that's a lot of data to mine. And we tried looking at when do cryptos or cryptocurrencies trend, for example on CoinGecko or on CoinMarketCap, right? So like if I go to CoinMarketCap or CoinGecko and I press the search bar, there's a list of trending tokens there. And what defines the token to become trending and then start spiking? We looked at the on-chain analytics and the on-chain data, things like the wallet activity, trading volumes, price trend lines, and we started looking and identifying and having our AI and machine learning algorithms identify tokens before they trend. So this is a predictive tool. It's called Discover. And out of all the 20 plus thousand tokens that you could possibly access on KyberSwap, it presents 50 tokens based on the past 1 day or the past 7 days data that actually presents an opportunity possibly of trending in the future. And typically what a trader could do is to look at those predictions plus looking at which tools or which sources of information that they are used to. Maybe they might look at Luna Crush, maybe they might look at Nansen, maybe they might look at the project itself. Are they going to announce? Is there anything that's upcoming, that's announcing, that's very major? And piecing this together, they can make better decisions. So the whole goal here is how can we help users make better decisions with their assets and their tokens. So those are the current priorities. Long-term goal, very clear, to make KyberSwap the most used decentralized exchange in the world, making sure it's decentralized, it's fast, it's cheap, it's safe, it's rewarding, and that any asset can be listed, anyone can use it, anyone can trade on it. And it's not just about making money, it's about being able to interact with DeFi in a way that's accessible and easy to use for all.
Wow, I'm quite impressed by the Discover. Is it free?
Yeah, all our tools are free on KyberSwap.
Do you plan to, launch it as a separate product? Because it's like big data meets artificial intelligence and meets blockchain.
Yeah. So I think this is just a start. I think this is probably the first predictive on-chain tool. This is the first of a suite of products that we plan to build out. I don't have privilege of sharing anymore at this time.
Yeah.
But there's definitely more. There's definitely more things that we're trying to build out using on-chain. So for us, because we have so much on-chain data, we want to kind of be able to figure out how can we analyze this and provide an analyst an analyst recommendation. In fact, better an analyst, right? Like if we were to ask an analyst to look through 20,000 tokens, they wouldn't be able to look through that data in the same way even, right? So I think this is definitely something that we're going to build much stronger on, and well, we hope to give tools as much as possible for free, but there might be, for example, some paid tools in the future that we might roll out as well.
I think that's all the questions. Oh no, I have one more. You have your own liquidity pools, but you also aggregating data from other liquidity pools and exchanges. So is there
That's right.
any preference that you make for your own pools during the routing process during the swap, or is it like you only choose the best price?
Yeah, this is a great question, right? Because because we obviously would like to get as much volume on KyberSwap pools. However, if you look at the priority is to give users the absolute best rates. So the absolute best rates right now means that when we dynamically route, there is no preference to KyberSwap pools. For KyberSwap users or people who are farming on KyberSwap or KNC holders, there are advanced modes where I can choose, for example, if I swap on KyberSwap, only to swap through KyberSwap pools. But that's not a default option, that's an advanced option. For normal users, it's just purely what returns the best rates or maximum return to you.
Thank you for the answer. We have a number of people who wants to ask their questions, and I will start inviting them to speak. We'll start with Barbie. Please feel free to ask the question.
Hi, Barbie.
Hello. What are the key benefit of Kyber DMM? Thanks.
Okay, thank you. So what you're asking for is what is the key benefits for a user for KyberSwap Classic. Classic is what we used to call is what we call our DMM protocol. So KyberSwap or Kyber Network, we pioneered. So everyone knows what the AMM is, which is Automated Market Maker, which is what is the building block for liquidity on DeFi. And what we created is a protocol called Dynamic Market Maker, or right now it's called KyberSwap Classic. And this is where it's kind of like when you're using an Uber at the times where there's high demand, the price goes up, and when there's low demand, the price goes down. And what we want to do is during times where there's so basically it's a dynamic fees. It is not static fees, right? So that creates the onus or the incentive to incentivize trade volume when the volume drops. So therefore, giving more superior returns to liquidity providers. We have two protocols now. One is called Classic, and one is called Elastic. Elastic is a different form of AMM, which is closer towards the style of Uniswap v3. By the way, if you'd like to go deeper into any of this, we have all the documents, the technical documents on our website, our aggregator documents, our classic documents, as well as our elastic documents. I'm not a dev, so I'm definitely not going to be able to answer all your technical questions. But at the end of the day, the whole point here is to provide a protocol that allows liquidity to be aggregated in a way that's efficient, that maximizes capital efficiency, and returns good rewards to liquidity providers. So I hope that answers the question, Barbie. Thanks.
Thanks. I think that answered the question pretty well. So I will ask our next guest to speak. It's Mona Lisa. We have quite an interesting names. Mona Lisa, you can ask your question.
Hi.
Hello, can you hear me?
Yeah.
Yes. Hi.
Hello. Can I ask?
Yeah, sure.
Yes, please.
Okay. My question is, as a beginner, what options do I have in Kyber network? As a beginner.
That's a great question.
Thank you.
So if you head over to KyberSwap, you will see that there are a few things you can do. So that's kyberswap.com. And if you look at the top bar, there are a few things that you can do. One, where you can swap the tokens that you have. You can buy crypto. So it means if you don't have crypto, you can actually connect a wallet and buy crypto using your credit card or even Google Pay or Apple Pay. And then you can start earning. So you can start earning by a few ways, right? So the simplest way is you have some capital. Let's say you don't want to trade, you can go into the pools. For example, now the time is volatile, right? So like if I have a very low tolerance for risk and I'm very afraid that any tokens, alt tokens or even major tokens that I hold might depreciate in value, maybe I want to preserve my capital in stable coins, right? So like for example, Fringe Finance is going to launch a stable coin soon. So some of the major stable coins, for example, are USDC or USDT or DAI. If you look at the pools on KyberSwap, you can actually go to the pools and earn on some of these pools. So that means you deposit the capital, and this capital is used to facilitate trades on KyberSwap. And every time there's a trade made, your capital gets a small piece of it, a commission of it, and then that becomes your return. And some of these pools, even for stable coins on organic trade volume, is getting 10%, 20%, 25% yield. And if I'm looking at the simplest way that is not speculative, it's not trying to push you towards altcoins or something that's going to 100x. It's literally a stable coin, a coin that's supposed to be designed to stay in value. For example, pegged to the US dollar. You can still hold those tokens and you can still earn, and in some cases, earn much more than you would get, for example, from rental yield with property or bank account yield or a fixed deposit yield or even the average stock market yield. So I think that's one great way. The other thing that you might want to do is to can take a look at campaigns. Campaigns are trading campaigns where people participate. For example, the last campaign was for BNB chain. We had about 4,400 traders that participated. And out of these traders, probably a few dozen or if not a few hundred of them won some KNC rewards. So we reward users for testing out, for trying out different chains, for participating in trading campaigns. And if you stick around with Kyber, just like with this giveaway with this AMA, we do lots of other giveaways, fun stuff like meme competitions, but I would say stick close to the community and with KyberSwap because you will get a lot of information and alpha to get started, right? Because there's a lot of information and crypto moves very fast. KyberSwap, our goal is to work with good, reliable, stable projects and to feed as much good information to our users as well, not just provide the tools. I hope that answers your question.
I love how, Imran, you can describe the most complicated concepts in such a straightforward manner.
Thank you.
Let me invite our next guest to speak. Striker, you can ask your question.
Hello. Very nice, Aima. My question about, there are many bridge hacks nowadays happening, and it's very sad endings actually, and demotivating for many people. I see a lot of chains, and you mentioned those names. I wonder two things. Most used or preferred chain combinations, bridge combinations. Actually, you might share if you can. And is there any insurance mechanism, as I said, bridge hacks on KyberSwap? Thank you very much.
Excellent question.
That's a very fair question, right? Even the BNB chain bridge was recently exploited. I don't have a technical answer just yet. On our side, with all our protocols, we are code audited. We have a bounty program. The whole point here is to address any security concerns upfront. So our number one goal, our number one constraint is user safety when it comes to our own products and code. When it comes to bridging and when it comes to the chains, I think there's a lot of stuff that may be beyond our control. So for example, it's beyond our control what happens on BNB chain itself, or if a chain like Solana or any of the other chains might go down, right? So I think some of these things we don't have that much control on, but we do our best as a good partner. If we see any anomalies, we immediately raise up to the team. And I think like if you look at some previous incidents, Kyber has worked with various protocols to do that as well. With regards to insurance, I think this is something that we're looking into. So I think a couple of different things. One is around Web3 or protocol-based insurance, but there are many different layers of insurance, right? Like insuring the transaction itself for a user, or insuring the smart contracts, or insuring the UI. There are many different layers on it, and I think there's no one solution provider right now that covers everything to a T. So I think that's something that we are looking into. The last thing that we're looking into is from the Kyber DAO perspective, looking at a certain amount of funds and maybe a treasury amount that is accrued over time through the fees that we collect through our protocol, right? To allocate towards some sort of level of first line insurance as well. So I think these are the things that are not yet in place that are being discussed. On our side, we've always been ensuring that we are really focused on user security, code bounties, and smart contract auditing as well. So our smart contracts are audited by Chain Security. They're all live online, and you can Google them and you can read all you want about the KyberSwap code audits.
We definitely will. And for your bridging solution and cross-chain, were you utilizing any solutions of your partners, or was it your proprietary development completely on KyberSwap side?
So for now, we are integrated with multi-chain. One of the reasons why is they're probably one of the most integrated. That also means that they can support all 13 chains that we're on. So far, in terms of the technical integration and all that, that's also one that our engineering team, our research team, and our product team aligned, was the one that is decided to go on. From Kyber network side, we are a very tech heavy team. We have about 140 people in our team. About 80% of them are developers within the research, development, engineering, product teams. So I think they know what they're doing. They've been, working on, again, DeFi for the last 5 years. So I think that's the solution that we currently have. I think we also looked at whether we could build it in-house. But right now, the solution is with multi-chain.
Thank you for that. The next one is from Adam Lennon. Adam, you can now ask your question.
Hello.
Hi.
Hello.
So I have one question for KyberSwap. I see on Twitter have a post about the top 10 desks for review on crypto fees. So what is the real yield means, and do you think real yield will be the next trend of DeFi? Thank you.
Great question. I think if you look at what Konstantin and I have been talking about, I think that's a good focus, right? So let's try to define what is real yield, right? Real yield is basically where does the rewards come from? So for example, if you look at a lot of the platforms that blew up, and this includes Anchor, Hodlnaut, Celsius, Voyager, what they said was, hey, you give us your money, we'll give you this fixed promise return consistently every month or every year, and we'll take this money and do XYZ with it. So most of the time, they would not be specific where that money is going into, what the investment strategy was. They would say, hey, we're going to deploy it in DeFi, we're going to deploy it in this and that, and with sophisticated investing models. And to be honest, many of them went and YOLO'd all your money into, for example, Anchor, USD, and it blew up, right? So the problem with that was that it blew up because the tokens, the rewards were essentially just completely inflationary. The tokens were just being minted and there's no value to it, and it all fell apart. So real yield is really about, hey, how do we create an economy that actually creates value and revenue for its stakeholders? For example, when Ethereum as an economy, not just as a computational network, when Ethereum is being run and people continue to build more and more and more use cases on it, there is real yield to the Ethereum network for the Ethereum stakers, because For all your use cases, they require transactions, and for your transactions, they require Ethereum to pay as gas. So Ethereum's real yield comes primarily from the transaction fees, the gas fees, and as a function of how much Ethereum they burn as well. So if you start looking at it, they are starting to burn more tokens than they are minting already. So it's starting to become deflationary. If you look at how it applies to a protocol like KyberSwap or any other AMM, it's about people using the liquidity protocols to trade. And when they trade, are they paying a certain amount of fees, and how much are those fees? And are those fees what is being promised and returned to the stakeholders? So, for example, in our case, there are two sources of yield when you participate with KyberSwap. One is with liquidity pools, where we say, hey, there's this pool on USDT, USDC, on Polygon, or on Optimism, for example, with 10% or 25% yield. This is 100% from trading volume of users like you and me swapping between USDC and USDT. And this is real yield because it is revenue generated through this trading, and that returns as profits to the liquidity providers. Part of this revenue is kept within KyberSwap and the DAO. Then the others is returned to the liquidity providers as profit, and that's the real yield here. There's a second element here where we say, hey, there's going to be a campaign where we work with a partner, for example, Lido Finance, the largest liquid staking platform on DeFi. And using these assets on this chain, when you farm, you earn liquidity pool fees, but you'll also earn extra rewards from KyberSwap in KNC and Lido Finance in LDO tokens. And this is not promised to be forever. This is not promised to be created out of an economic model. It's very simple. It's like, hey, we have this campaign. It's time sensitive. For example, for the next 1 month or for the next 3 months, we have this campaign and X rewards are set out. And it's completely similar to an e-commerce site or a bank that says, hey, sign up for this account and get this iPad for free, or sign up for a platform, buy this thing on Amazon and get this voucher. Like, all these are essentially not real yield, right? These are all incentives that are being paid out to users. The big difference or the big danger is when a protocol says, this is not an incentive, this is real yield. And the problem is that in the past, with the platforms that blew up, they were proclaiming it to be real yield when it was pure incentives, which were inflationary, and that's why they blew up. So for KyberSwap, we're looking at real yield via the liquidity protocol fees, plus rewards through liquidity mining with partners. I hope that's clear.
Yeah, that's absolutely clear. I will ask Shubham to speak again. He has raised their hand. You are on the stage.
Hello.
Hi.
Can you tell me about KyberSwap Elastic walkthrough?
Walkthrough. You want to walk through, is that right?
Yes. KyberSwap Elastic walkthrough.
Okay. Thanks, Shubham. So I think what Shubham is asking is, how do we use KyberSwap Elastic? And I have to be pretty honest, DeFi is not the easiest to use for retail users. We're sorry about that. I think in order to preserve the technical integrity, certain steps, and also options for users, there's a lot of options for users on Elastic. It can get a bit complex, but essentially what you want to do is to look at the pools on a chain. So you might want to choose a chain that you like, or you might look at our announcements where we say, hey, we're working on Polygon, we're working on Arbitrum, or we're working on Optimism. Look for the chains that we announced the liquidity mining campaigns on. You can go to the farm page, or you can go to the pools page to see which are the pools that are participating with the farm. They will have an icon there that indicates that they have the farm rewards, and they'll indicate the APR or APY, which is the annual calculated returns on your capital. The other information that you can see, which includes how much TVL or how much value is locked in that pool, and how much volume is done in the past 24 hours for that pool. What you want to look for is a pool that for the volume, for the TVL that it has, the value lock, has a pretty high daily trading volume, right? Because that's an indication that people are using that pool, and that there's more fees that are being routed to that pool, and therefore in the longer term more returns. So I would kind of look at which are the pools which have a decent volume with decent APR and have those mining rewards. So again, if you're looking at Polygon, we have some of the pools such as our Stake Matic pool, to Matic pool, KNC My pool. In the Arbitrum and Optimism, we have some of the Stake ETH pools that you can check out. And a lot more, to be honest. So just look out for the farming points. If you look at our blog and our documents, we will get more documentation about how to use the product. There are actual walkthroughs and screenshots and step-by-steps of how to use it. But if you have any questions, feel free to go to our Kyber network on Telegram, Kyber network in Discord, and our moderators are there. They're more than happy to answer any questions that you may have.
I'm sure the people from our space will go and ask the question, and your moderators will have a job to do. So we are coming to the last questions from the community, and I'm asking Blaze. You are on the stage. Please feel free to ask your question.
Hi.
For about KyberDAO, how many KNC do we need to log to participate in KyberDAO?
KyberDAO, right now, if you want to go and check it out, is on kyber.org. So that's our governance platform, our governance forum. People who hold KNC can stake on it. You can get certain rewards by staking plus participating in governance and voting on it. So you can go to kyber.org. It's over there. You can see the past history and you can see how much KNC is locked. We are in the process of moving the Kyber DAO into the KyberSwap platform as well. So you would probably see it something like a kyberswap.com/DAO. But this is something that's in the works, not yet done yet. But it's just an aesthetic matter of shifting it over. The other thing that we want to do with Kyber DAO as well as KNC is to find a lot more utility. So for example, with Fringe Finance, we're very happy to do this with them because the whole idea is to provide more utility for KNC. The more that we have utility for KNC, the more it's used in platforms like Fringe, the more it's used in platforms like QiDAO, Aave, and so on and so forth, the whole of DeFi, the more valuable that KNC is. And the less essentially selling pressure, right? So we want to provide that utility. So we're very happy to do this with Fringe Finance. So I hope that gives you a bit more insight to it. You can go there. You can feel free to ask more questions in the DAO forum as well.
Yeah, sure. So the last one is from me. On 28th of September, Fringe Finance and KyberSwap announced the partnership. And the nature of a partnership implies that KNC token was integrated on Fringe Finance with a 52% loan-to-value ratio and debt limit of 1,129,000 USD. So the holders of KNC can take loans on the platform, but not only that, also the Fringe token was whitelisted on KyberSwap, and KyberDAO will consider taking collateralized loans on Fringe Finance platform to fund the operations. Can you, what is your vision, Imran, of the nature of our partnership, and how do users of our protocol benefit from it?
I think I'm bullish on this. If you think about it, what Fringe is trying to do is to make DeFi a safe place to invest and borrow with your token holdings fast and easily. I think for KyberSwap, we want to make DeFi easy to use, safe to use. So I think first of all, we are very aligned from a vision and values sort of way. I think the second thing, like I mentioned, is we are very happy to provide more utility to KNC holders. For people who are wanting to hold and long KNC, you can hold KNC, you can use Fringe Finance, get an over collateralized loan. What can you do with those tokens after that? You could go to KyberSwap and use KyberSwap for liquidity pools and liquidity mining with the stable coins that you just unlock with your loan, and you can do a lot more things in DeFi. So I think for us, we're trying to really unlock a lot more user paths, user journeys, user utilities with DeFi, and I think with Fringe, I think it's just the beginning. I think we're discussing a lot more with the DAO and even looking at integrating KyberSwap within the Fringe finance dev as well. I think for us, ecosystem integration is an absolute key strategy in terms of making sure that KyberSwap is going to be relevant and top 3 or even top 1 DEX in the future. And I think, we like to us, I think liquidity, swapping, I think these are like the basics, the basic plumbing and backbone of DeFi. And very closely followed after that, it would be lending and borrowing. And I think there's a lot more that can be built on top of this partnership with the larger ecosystem.
Thank you very much for your answers. And we are wrapping the conversation. I want to thank you once again for the participation, and thanks to our listeners for joining. If you missed certain parts, you will be able to tune into the record of the space on Twitter, and will also be uploaded on YouTube. Do you have any final words?
I'm just happy to have had the time to chat with you, Konstantin, and as well as the whole community of Fringe Finance. Guys, you should check out Fringe Finance. If you haven't, you can check out KyberSwap, use KNC, and get that over collateralized loan on Fringe, and then use it back on KyberSwap. It's like super cool. It really starts unlocking some really degen behavior, but in a safe way, right? So I'm just really looking forward to enabling a lot more DeFi. We're really looking forward to more ideas and more feedback from the community. So for those who would like to interact more with KyberSwap, who have a lot more ideas and suggestions for us, please find us on our Twitter, find us on our Discord, on our Telegram group. And we're really here to build DeFi for the long term. We have a very long horizon, and I think we're super early. Everyone here, I think we're going to make it if we stick to certain principles and safety rules, and really keep close as a community. That's it from me.
Thank you again, and I wish everyone a good day and night, depending on your time zone, and bye-bye.
Thank you, bye-bye.